Well, good morning, good afternoon, and of course, good evening, traders from across the globe. Thank you, as always, this time for tuning into my 2916th edition of Short-Term Trading Live with Oscar. Again, thank you for tuning in, everyone. Love your comments. As you know, I reply to each and every one of your comments personally, so please keep leaving comments below. We love these comments, and I love to converse with my Omniacs out there. This video, 2916, coming at you on a Wednesday night for trading Thursday, May 22nd, 2025. Please remember, and I will type it out for you, this is a risky game. Risky. Let's do that in caps. This is a risky game. Never trade without protective stops. Put them in first, and you'll live a lot longer in this industry. Where are we, kids? NASDAQ daily bar. The OMNI remains red for trading on 5/22 Thursday. Remember last night's video? I said an official flat top, and we know that flat tops produce market drops. Well, bingo, kids. There's your flat top. And there's your market drop. How about that, huh? That might look small to you, but we were trading somewhere in the 21,525, 540 area in NASDAQ, and it dropped all the way down to 21,070. Wow, 500 points. Big move. Holiday reversals and flat tops is what we will call this video. The other thing you might have noticed is it's also fallen out of the beloved channel right here. Look. Fell out of this channel. Boom. Below the channel on that market drop. Flat top did produce the market drop as we expected. We've got more charts to look at, though. Now look at this guy. 23. Russell 2000 tapped out at OTAPMA. The Omni Trading Academy's proprietary moving average, look at that tap out right there. Once again, below whatever channel existed. See you later. All right, but we do know that we're in a holiday reversal week, and a lot of times it will just reverse out of this and go the other way when we get back. But let's keep looking. Please leave your comments on this video. Like and share. We love when you like and share our videos. You know, another thing, you can join me really simply in this live trading room where I am live every day and night. I am there right now live, even though I'm using this camera for you cats. I'm using the other camera for the trading room, and you are invited in this trading room where no credit cards are even required. You simply would go to livewithoscar.com. Very easy. Just create a username, password, look in your email. You'll get an email, shoot it back. You can log right in free of charge. The email may go to spam. Just check your spam if you don't get it in the email from Live with Oscar. And you can join me in my live trading room. Listen, it's a non-hostile room. I love to help people in here, and it's free of charge. Come hang out with me. All right, that all happens at livewithoscar.com in my chat room. So we tapped out at OTAPMA with the Russell 2000. You saw what that NASDAQ looked like. Let's go to another chart. Look at the Dow Jones, another problem here. Tapped out at OTAPMA, dropped below the average. Dropped below our channel. Boom. See that? So that's not good either. Our indices are tapping out. Now, why would that happen? Let me show you another chart here. I designed something very nice. I was looking at it myself and went, this has to be shown. Remember the T-bond chart I was showing you for a few days, and we expected that maybe they'd come in, the Fed would come in and find support down here? It only went up for one day. It just about hit the blue line, came right back down on Wednesday, and we are starting to drop, kids. This is a problem. You cannot have interest rates, or I should say you cannot have bonds, futures, the bond futures, this is how it works. You cannot have bond futures dropping without interest rates going the other way. That arrow flips, and it makes interest rates go up. When T-bond futures go down, it makes interest rates go up, up, up. In fact, you don't need the Fed, you don't need Powell, you don't need anyone to raise interest rates. If the banks or whoever is doing it, you got to assume the big banks, keep pushing bonds down, it keeps pushing interest rates up. Now get this, you want to see what's really interesting? Banks, big banks get to borrow money from the Fed and they get to borrow it somewhere around 4.25%, right? This is what big banks get to borrow money at. Now, big banks force the bond market down, and that makes interest rates go up automatically, even though the Fed hasn't touched them. So you know what that tells us? The banks get to buy the interest rates from the Fed at 4.25%, and they get to sell them to us at 8 to 9% because they keep knocking the bonds down and raising the price that they can sell us mortgages at. It's a game that they're playing, and we can't stop them right now. Why would they stop? It's money being made hand over fist. Borrow at 4.25%, and on the same day, lend it out at 8 to 9%. How could you lose? Well, that's why they keep pushing these bonds down. This is going to go to 10% if they keep pushing the bonds down, where you borrow from a bank. Meanwhile, the bank's still going to be paying 4.25% to 4.5%. They've got this thing on the run. Now, look what else. You look at another version of this chart. We'll go out to the weekly, and I believe I left that here. The weekly is not good, kids. Let me blow this up. I'll show you what I'm talking about. This is not good. The weekly bond chart, not only has it respected the crap out of a long-term average, but it is now below the channel. That is not good. It is heading towards a line in the sand. 109.08 to 109 even, down here. We have a line in the sand. You get below that line in the sand, and this is going to crack below 107. That is going to drive those rates higher and higher. Something's going to have to give. Either our administration gets together with the big banks and the Fed and says, let's do a concerted effort to get bonds higher, or something like QE is going to have to happen because bonds are dropping pretty rapidly, and that's driving interest rates up. When you drive interest rates up, you must remember that drives stocks down. That's what happens when interest rates go up. The value of a stock starts to go down because the amount of money and interest they have to pay on corporate bonds goes up, making the value of their company go down. The bond market needs to stop doing what it's doing. So bonds were on. Let me just go back to that last one, number 2. This needs to stop. It's a problem for us right now. Then we've got something else which is a little different. It's slightly brighter, slightly happier. Look at Ethereum. It was in this big bear channel for how long, right? Bear channel, bear channel, bear channel. Bear flag produces lower, lower. Then we break out right here into a flagpole, into a bull flag, even higher we expect. So Ethereum, crypto looks good, but I'll tell you right now, the best buy on this board, unless something goes wrong, is this. I noticed it all day today and couldn't wait to show you. The best buy on this board is Bitcoin. The chart is beautiful. The formation is wonderful. The 121 target is within sights. Bitcoin looks fantastic. I hope that helps, traders. Please leave your comments. Please go to livewithoscar.com and join the site. Leave your comments below this video. Like and share them. And remember, stops are in. Emotions are out. Rock and roll, traders. Thank you so much for tuning in. Put those stops in first and come join me at livewithoscar.com.